I'm here with Ben Cowen, the president of BOK Mortgage. Mr. Cowen, you're still sort of new to BOK. Tell us a little bit about your background.
Thanks, Richard. Great to be here. Joined BOK in December, and still moving here from Charlotte, North Carolina. Been in the mortgage business some 25 years, primarily with large bank-owned mortgage companies. So great to be here. Still learning the state, though.
Good. Welcome. You kind of walked into a refi boom, didn't you?
Yes, I did. I started mid-December, and it wasn't too far after that the Treasury anyway started talking down the markets, that they were going to get involved, and pretty quickly we saw rates tumble.
And that means more business.
Business has been incredible. I think most lenders would tell you they've got more business than they can handle, and are really trying to take care of their customers the best they can.
Some banks and brokerages downsized to the point where they couldn't adequately handle the boom that came about that time. That wasn't the case with BOK, was it?
That was not the case. BOK is a direct mortgage banker. We've got our own capital. We're retaining our own servicing. We don't sell our loans to a third investor. We deal directly with Fannie and Freddie. So we're in a different position. We deal directly and have plenty of capital to lend.
Some would say that Oklahoma is the place to be right now if you're in any aspect of the home mortgage business. Do you think so, compared to what's going on in the rest of the country in housing and lending?
Well, Richard, certainly home values in the states that Bank of Oklahoma is in, for the most part, are holding a lot stronger than the rest of the country.
Did Bank of Oklahoma take any of the federal stimulus money?
No, we did not.
Why not?
Well, we didn't need it, quite frankly. We are very, very strongly capitalized. We've got the capital to grow our business, and we don't need it.
The contraction in the secondary market in terms of credit, again, doesn't hit you, or hasn't hit you,
it has impacted us, Richard.
How so?
Well, I like to say we're kind of back to old school lending. But I think the mortgage industry went down a path of where there was a mortgage for anyone. It just depended on the interest rate, regardless of your credit score or how you handled your credit. And we've kind of gone back to old school, where you've got to have sound credit. You've got to show responsibility as a consumer with your credit to get a mortgage.
It's been said that in the oil patch, particularly, a lot of those loans didn't happen this go around, the Alt-A loans and the Sign Here loans. It's been said because of the experience here in the oil bust of the 80s, learned lessons the hard way. Does that seem right to you?
Yeah, I would say so. Some of the national statistics that I've seen is, a lot of the Alt-A subprime were really done in some of the other parts of the country. This tends to be more of a conservative part of the country in terms of lending and how consumers handle their credit.
And that's kind of a chicken-egg question, I think, on the coast especially, when house prices got out of control. They had to have some of those loans to get into a house in the first place. Well, then that creates that leverage, false or otherwise, depending on who you ask.
That's right.
That pushes house prices up.
That's right.
And then until it finally exploded.
Right.
But we didn't have those false increases in values in Oklahoma for many reasons, including that chicken and egg chase never really got going here.
That's right.
That's right.
And we're really seeing in general that home prices are holding here, which is very encouraging. We are still offering interest rates that start with a 4, and so refinances are still booming, and so it's going very well. And I would encourage any listener or consumer out there listening to this, now is the time.
We have been in a historic range of interest rates for quite a while.
Oh yeah.
And it won't last forever.
It will not last forever. And one of our frustrations is we, of course, are wanting to help our customers get into that lowest rate that they can. We see a lot of folks, though, that they're looking for that 4.25%. They're always looking for that little bit better, trying to save an extra $30, $40, $50, $75 on their payment when they can save a huge amount of money now just by locking in just under 5%.
If the modern energy boom is over and we don't recover prices and jobs by the end of the year, there's a lot of folks that I think you can assume that there were a lot of folks that bought houses based on careers that have kind of dried up. Oil and gas both are trading at about a third of what they did at their high. Now, I don't think anybody, I hope nobody made strategic business decisions on $150 oil or the equivalent natural gas, but some did, apparently, because some jobs are going away. Having said all that, do you anticipate a wave or a wavelet of defaults in Oklahoma or in the oil patch as a result of those jobs?
You know, Richard, I'm not an energy expert, but I will share with you that my perspective is that our economy is very diverse, and I think the economy, the underlying economy, we've kind of bottomed, and there is some strength there. As I mentioned, the purchase transactions are really starting to take hold and bubble up. So I'm optimistic that this economy can absorb those jobs. That I'm hopeful that we're at the bottom here.
The question is, you lose your job unexpectedly.
Sure.
You own a home and you have that mortgage payment. What's the first thing you should do to try to keep that home in your hands?
Richard, I'm glad you asked that question. Call your lender. Whoever your mortgage is with, you should call your lender. The lender is there to help. And we see that a lot of consumers, obviously that is a big shock, right? And that's a big stress. And a lot of consumers tend to just pull back and avoid the phone, not respond to creditors. But they need to talk to their lender soon, very, very quickly. And I'll tell you why. This new stimulus package that's been rolled out also allows us as lenders, the person that's servicing your loan, to help you to reduce your payment. We have loan modification programs set up that the consumer may qualify for. So best advice is call your lender and call them soon.
It's hard to believe that, but the fact is banks are not in the real estate business. They don't want to have that house
That's right.
to deal with. They
not.
want to help you keep it.
That's exactly right.
Okay.
And if you do qualify for a short-term reduction in your payment, the agencies that we work with, Fannie Mae, Freddie Mac, they're standing by to lower the lender's payment, lower the borrower's payment. So I mean, it's a very direct. We can offer very direct assistance to that consumer.
There you go, a snapshot of BOK and the mortgage business in Oklahoma. With Ben Cowen, president of BOK Mortgage, I'm Richard Mize, real estate editor for the Oklahoman.